Hi guys, it's Downtown Josh Brown. We're here to play What Are Your Thoughts? It's a Tuesday, so I'm here with Michael Batnick. Michael doesn't know what I want to ask him about, and I don't know what he's going to ask me about. So stick around, play along with us, and we'll see you in a minute. Okay, so I'm going to ask you about the monster day we had yesterday in the market. I think it's one of the best days. I mean, it's not a huge day on the year, but just in general, it's a major day because of how many of the losing stocks had 6, 7, 8, 9, 10% moves within the scope of one day. Would you say that's why it was so notable?
It was. And before we get there, can I just say that I love your new Green Day look. You look like you're in Green Day.
What? Oh, I gotta do.
Because you're like
You're
like a middle-aged man,
report. All right, all right.
but like still kind of young. The hair, the you look good. I like it.
Okay, thank you. I'll keep it going for you.
Okay. Yes, yesterday was very notable for the exact reasons that you mentioned, and I did a post about this,
Yep.
outlining exactly what was going on. So, what happened yesterday was so interesting because, and listen, it's one day, so it's way too early to get excited over this thing.
Dude,
But the stock market,
you just actually yourself. That's what I was about to do. But okay, go on.
oh,
Go.
well, yeah, I mean, but the stock market yesterday was acting as if this thing is going to end because the stay-at-home stocks got slammed relative to the market. The losers became winners. So all of the most sensitive stocks, the airlines, the cruises, retail, hospitality, they all had monster days. So again, it is one day, but we'll take it, right?
Right. No,
It's got to start somewhere.
I totally agree. And, it's important to have a day, I think, if we're really like trying to find a bottom and trying to convince ourselves that we've seen the bottom already, it's important to have a day or two here and there where like a hotel chain that's 50% off its high has a plus 10% day. I think like the shorts need a little bit of fear in those names, right? Like the shorts are not screwing around with Google and Microsoft. That's where they are.
Right.
And I think like they need a
Right.
little dose of fear, just like the longs are getting on a weekly basis. So I think that's a good point.
Yeah, keep them honest.
Keep them honest. Totally agree. All right, what do you got for me?
Let me ask you a question, sir.
Mm.
The S&P 500 up 35% off the lows,
Yeah.
just 13% off the highs, up 6% year over year. And I don't know if you've noticed, but the economy is not doing so well. Is the stock
Yeah.
market wrong?
Well, one of my posts from last week, where I talked about the stock market actually is doing its best to attempt to capture what the economy is now, looked at the idea that just we have this confluence of events that favors the companies that happen to have the biggest market capitalizations already. So it's not worth rehashing all the things about work from home and cloud computing, et cetera. But people that say, I don't understand the disconnect between the stock market and the economy, there really isn't a disconnect. The companies that are doing badly out in the world, their stocks are doing badly too. Go look at a rental car company. Go look at Live Nation. It's like the stock market gets it. And then when you see the 52-week high list, it just so happens those are trillion-dollar companies and
Right.
they're more important. So people are like, oh, but what about Hilton and Hertz and Avis and Royal Caribbean?
Right.
They're
this big.
$2
this
billion
big.
market caps. Who gives a shit?
Right.
So
Right.
yeah. So my point was not the stock market should be 30% off the low. It's look at the composition of the S&P. And if you really want a feel for how corporate America is doing, maybe it's better to look at the Russell 1000, which doesn't look as good as the S&P 500, or because it's got mid caps in
2000.
there. Or you can look at the Russell 2000. Look at how like a typical publicly traded business that's not Microsoft is doing. Those stocks look more like the European stock market in terms of how much they went down and how meager the bounce off the lows had been, at least prior to yesterday. So I think the stock market's like kind of getting it right. I know it pisses people off because the indexers are winning
How about
again.
this?
But
This is interesting though. Like the Russell 2000 and the Russell microcap indexes are only down 20% year to date.
Say it again. Russell 2000 is year to date down 20%. That's a lot.
And the microcap. And
That's
the
a lot.
microcap. Is that a lot?
Also, forget year to date.
I don't think that's that.
Hold
It's
on.
not that much.
But that's not from the peak because they rallied in January and most of February. So they're down more from the peak. The drawdown is deeper.
False. I mean, it just so happens that they're both 22% off the highs. So
That's it?
that's yeah. And in the last year over year, they're both down around 14%. That's not a lot at all.
Yeah. The other thing is indexes are very misleading because of the industry breakdown. Like the Russell is like almost de facto a financial index now. It wasn't always forever. So you kind of like if you're going to comment on the level of the markets, I not to like talk down to anyone else, but there are a lot of people that have an opinion of where the markets are and what they should be. And then you ask them, what percentage of the S&P is healthcare? I don't know. Well, roughly, can you come with an even 10%? No, not offhand. So why are you saying anything? Like, why do you have anything to say? It's like somebody saying to me, Josh, do you think Moderna's vaccine is going to work? You want my opinion?
Wait, actually, sorry, I have to actually you here.
Please.
The Russell 2000 is only 15% financials. Healthcare, tech, and industrials are all bigger.
Okay.
In Russell 2000 value, it's like all financials. It's
Okay.
like 35%.
So I guess my point is made well for myself. I don't have a view on how high the Russell 2000 should or shouldn't be. But when I think about the S&P, I have a view. Why? Because I'm looking at what's in it. And I understand the things that are driving those stocks higher or lower. Same thing with international stocks. People are like China stock market shouldn't be going up. What's in it? I don't know. Alibaba,
Point
have
taken.
you heard of it? Tencent, have you heard of it? All right. Degenerate gamblers. What? Where did that term come from? No one says
You know
gambler.
it's funny. There are other words that are only used with another word, like they're attached at the hip. You never hear degenerate without gambler to follow. There's another word. There's a few other examples like that. I can't think of any offhand. Consummate professional. Consummate professional.
Yeah, nobody
for example.
says that guy's a professional. That guy's a consummate professional. It comes from somewhere. We'll find out.
You never say consummate human being.
Right. If you know where the term degenerate gambler came from, put it in the comments below. Anyway, here's what I want to ask you: what's more dangerous for a degenerate gambler? The legalization of sports gambling, or to discover the stock market? Like, what's more dangerous for them personally, not for the whole system? Let's say
good question.
Let's say you were a degenerate. What would be more dangerous for you?
The stock market, because I guess, listen, what's the difference? It's the same thing. If you're a degenerate gambler with sports, there's always a season. What if it's not basketball, it's baseball or football or hockey. But the stock market's open 5. What's the difference?
I'll tell you.
Tell me.
I'll tell you the difference. If you're a degenerate gambler and sports gambling is legalized, you're definitely going to lose a lot of money. Like, fine.
Okay.
You might have a little bit of fun doing it, at least at first. But you're not putting $100,000 on a game. Like, you're just not. If you're a degenerate gambler, they close down sports for 3 months and you discover day trading. First of all, your family members walk by you on your computer and you're like, oh, I'm just going over our investments. It doesn't look like what you're doing is degeneracy. It actually looks the opposite. Oh, he's so responsible. He's taking over our finances and using his free time to figure out. I'm saying he because it's always a he. So that's number one. It's got this imprimatur of respectability that sports gambling will never have. And then number two, obviously the dollar amounts, at stake are almost always going to be bigger with somebody managing a portfolio that doesn't understand that what they're doing is not investing but speculating. So for those reasons, I think. What'd you do? A costume
One more
change?
thing that I would add to that.
What'd you do? An earphone change?
My AirPods died. New cut. You're 100% right. If you will never put $100,000 on a game, but what you could do is you could start a brokerage account with $100,000, and it's a slow bleed. You're not going to lose it all at once. You're going to have some highs, some lows, some in-betweens. And if you're down $5,000, you know you're scrapping and clawing and revenge trading to get back to even. and it's just going to get worse and worse and worse. And you're down to $60,000. I'm not going to stop now. Down to $30,000. Screw it. I'm not going to stop now. So that's the danger with trading stocks. I completely agree with you.
I'll tell you one other thing. With sports, even if you're a gambler, you still know that there's flukes and like anything can happen, and you accept that randomness is because you're a sports fan. With stocks, you actually think that there's a way to do it. Like you actually think there's a way to consistently make money every week, and there isn't. Like I know consistently profitable traders, and they'll tell you it doesn't exist. So, but you could talk yourself into that because there are people wearing suits and ties doing it. And then the last thing I was thinking about, at least the game ends. In other words, you bet the Super Bowl, you do a stupid bet with another stupid parlay on top of it, and you do all these prop bets in the middle and you lose. The game ends, you go to sleep. The markets are 24 hours a day. There's Bitcoin when they close stocks down on you. There's interest rate futures. It never stops.
One final point. I used to gamble a lot on sports, and you can only take so many horrible beats before you're like, I'm never doing this again. This is so stupid.
Some people,
it's so infuriating.
Yeah.
Like with the stock market, you don't really have those really bad beats that stick in your craw. Like I'll never forget the time that the Jags were supposed to play whatever, the worst team in the league, and the Jags were good at the time, and Byron Leftwich, whatever happened. You know what I mean? Like, so you just don't have that same experience in the stock market. All right.
You also don't have the Fed to blame. The sports gambler, they have the commissioner of football. So if you had the Saints in that game where they got robbed from going to the Super Bowl, you have Goodell. And you have New York City where they called the play from remotely. But you don't have the Fed. Like the stock market junkie trader who keeps losing because they're shorting, momentum stocks, whatever they're doing, they always have somebody to point at, say, this shit is being manipulated. I'm a victim. So, all right, go ahead.
Wanted to get your take. I also listened to the podcast on The Ringer when they were talking about restaurants closing and the economics of it. And I think that like just hearing them talk about it, the economics of it, the reality behind it, like bars, for example, are going to change forever. A bar that used to be able to hold 20 people is going to be able to hold 12 if people even want to go back. What does the future of restaurants look like? I'm not talking about 5 years. I'm just talking about on the reopen. Like, how does that get back up and running?
I joke around. So my wife is like a neat freak. So like we'll check into a hotel, and if it's not like really, really clean, the whole trip is ruined. Like she'll spend the whole trip like, I can't wait to get home. It's disgusting. So we do a lot of research before we go places so that I don't, have my marriage end over it. So I was joking with her. I said, the next hotel we stay at is going to be the most immaculate thing that you've ever seen in your life because standards for hygiene are going up across the board. That's going to be the new table stakes. And to me, it's very similar. I don't know if I've made this analogy on the channel before to 9/11, where security standards went up. Like you used to just be able to walk in and out of skyscrapers in Manhattan and just do whatever you wanted, basically. And now there's cameras everywhere. There's security guards posted. Show me your ID. Let me go through your bags. Obviously, what went on with the TSA. So I think we're going to have that. But for hygiene, and if you're a bar, if you're a restaurant, that's going to be part of your cost. Now, there's a negative way to look at it, which is a lot of these businesses can't afford an additional health and hygiene safety cost.
Like vents in the air ducts and stuff to filter out the dirty air.
I'm thinking more like Purell and acrylic, clear acrylic guards, sneeze guard. Walk-in lunch buffet is over, stuff like that. But I would just say, if you're a restaurateur like David Chang, who obviously is not going to back down, he's going to figure out a way to make it feasible. And on the other side, 3 years later, 5 years later, we might be saying to ourselves, can you believe we used to go sit in a bar and the guy would wash the glass out and hand it to somebody else, without putting it through a dishwasher? Can you believe we used to live like that, like animals? And a great example of that is I'm old enough to remember sitting on an airplane and watching people smoke cigarettes on an airplane. I remember it. I saw it happen. So, and now you just look at that we were like cavemen. So that's the other side of this. It's going to be expensive, but it'll
How
be a
about this though?
business. People will make money, and if you don't
All
make
right, what's
it,
B?
So I don't know. What do you think?
All right. I think that investor appetite for new projects is going to just dry up. I think they're going to look at the new realities.
In restaurants?
Yeah,
So
like
if you're an
high-end
incumbent,
restaurants.
if you're an incumbent, that favors you. You don't want 10 new hot restaurants opening up every year. If you're
The
already
other thing,
set up,
I didn't even consider those walk-in buffets, which are like a huge part of New York City, and I'm sure every other city.
food courts, just people like breathing. Like one guy's walking with a slice of pizza exposed to the air, and there's 90 people around him having a conversation. Get out of here. It's enough already. We got to figure something new out. It doesn't work. It doesn't work. And they know it doesn't work in Asia. They're ahead of us. They're not playing that game in Shanghai. All right. I want to ask you about your post, Young Bulls, Old Bears. I agree with you. And I'm always on guard to have this happen to me. So you reference a book from 1870 where a guy explained that people begin their career in the stock market as bulls, and by the time they're retiring, they're bears. What do you think is the cause of that?
I think there's a bunch of things. I think one of them is just when you're young, you have your whole life ahead of you. So I think that's very natural. Old people see the end ahead of them, so it's just natural to be less optimistic. I also think that when you're young, you have a clean slate. You haven't been burned. You haven't had time to get jaded yet.
Cynicism hasn't set in.
Exactly. It's the same thing with gambling. You open up a brokerage account or DraftKings and you're ready to take on the world. And then you grow like, oh, it's not so easy. And you just become hardened. I also think there's a component of when you are, so everybody that crushed it on Wall Street, or maybe not, but when you're in your 30s, 20s, 30s, 40s, things worked a certain way. The world looked a certain way. And then when you're in your 70s and 80s, things look a lot different. And it makes you uncomfortable because you don't recognize your surroundings.
Yeah.
It's like the guy, I forget the character in Shawshank, who when he got out of jail, he just couldn't take it in the new world around him, and he killed himself.
Yeah.
So I think that's what it is. You just don't recognize the world around you, and then naturally you're less optimistic because you don't understand.
Yeah, I think there's a lot to that, and I think we should be clear. It's not everyone, because somebody watches and be like, "Oh, how do you explain Bill Miller? He's been investing for like almost 40 years, and this guy's going YOLO on airline stocks right now." It's not everyone. It's just a general trend that happens throughout the course of people's lives. A, they become more conservative because they know they can't replace the capital, and they should. B, they have more to protect, and when you're young, you have nothing to protect. And C, ways of doing things change around you, technology, culture, trends, and you realize the world doesn't really need you. You're not important to what's happening, and it turns you somewhat bitter, somewhat
Oh my God,
dyspeptic.
I'm gonna be Rubini when I'm in my 70s. You kidding?
You're going to be warning about crashes every 5 minutes. He's not even that old, that guy.
I know, but I'm pretty sure that I'm gonna follow the same track that most people do. I think that's like a natural curve, you know?
Yeah, no, it makes perfect sense. And I bet it's not just limited to the stock market. I bet like when you talk to like sports writers, let's say, and they see like a young new player coming up, they're super skeptical about, he's not a superstar. I remember Oscar Robertson,
I remember. Yeah, I remember.
Yeah, oh, Michael Jordan in his prime will beat any player that ever comes along ever. Really? I don't know about that.
Yeah. I also think that now is a great time to think about it just because of what's happening with Buffett getting cautious and Tepper and Druckenmiller being outright bearish. And Tepper or Druckenmiller are both in their low 60s, so they're not necessarily old. But I thought that when you contrast that with what's going on with the day traders, with Robinhood, with who's bullish and who's bearish, I think that's sort of a permanent feature, but it was just a good time to talk about that.
Some of the some of the guys that are like just the most dramatic in their bearish pronouncements, like either they're not in the game anymore, or you look at what they do, like they manage a fund that generates 2% returns a year. Like who gives a shit? What's the point even of having this statement when you're trying to track the 10-year treasury total return as your benchmark? What are we talking about? Maybe there's something to be said that people in their and I'm not saying this because I'm 43, but maybe people in their 40s and 50s are like the right mixture of they've seen a lot of loss and they've been burned and they've seen a lot of scams. So they have that healthy skepticism, but
You're in the sweet
they're
spot.
not close enough to the end where everything displeases them and everywhere they look is risk. Maybe like that's like something to think about in terms of like portfolio management, like how old
I think
is the team?
I think 35 is the new 43.
Okay, that's fair. Are you 35? Right.
Yes.
Well, also, there's something to be said about being aware of pop culture, what people are talking about, knowing people that are getting Pelotons and going to Chipotle. And these are the stocks that are driving the market. And if you completely are out of the loop with them, it's hard to catch up. So,
like, TikTok, and you also know Mel Brooks.
yeah, I'm very odd that way.
I have one last thing. What, if anything, have you changed your mind on over the last few weeks where, like, in the beginning you felt that, as an example, commercial real estate is gone, and now I don't think that. Is there anything that you've changed your mind on or not really?
Oh, from the start of the crisis to now?
Yeah.
I've done a 180 on Cuomo. I think it's enough already. I was down with the stay home, #stay home. I was with it. I totally understand it. I don't know anything about health or medicine. I understood the idea that we can't overrun the hospitals and we can't put frontline people at risk by having people doing whatever they want. I totally agreed with it. There were 130 deaths in New York yesterday. Why are my kids standing on street corners and them talking about not having summer camp? It's ridiculous. There are now roving bands of teenagers everywhere you look in our town. Multiply that times 1 million towns in America. That's what the summer is going to look like if they have all activities canceled. It is a bad idea. It's unorganized. These kids are all over each other. They're riding around in carloads of 5 and 6 teenagers. You got 10, 11, 12-year-olds sitting on bikes in front of closed pizzerias. It's bad. And I'm not saying send them back to school. I get that it's too early for that. But they're already talking about canceling things for July, August, canceling Little League. Get these kids on a ball
summer
field.
Camp.
What?
I heard one summer camp was closed. I'm sure a lot are going to follow.
Dude,
I don't think that's going to happen.
The owner of my camp is like very vocal, and he's on the board of the advisory panel to reopen the state. So he's talking to Cuomo, and he's a big operative in Democratic circles. He owns like 12 camps. They seem to be convinced that that camp will open, but like modified. So you can't have visiting day. Like you can't. But here's one thing that people don't know about camp. It actually started out as a quarantine. So the origin of summer camp, yes, the origin of summer camp in the Catskills and the Poconos was parents with children in Manhattan and Brooklyn and the Bronx in the 1940s and 50s wanted them out of the city in the summer. It's 110 degrees in New York City in the summer, and they had polio outbreaks and tuberculosis and all types of diseases that we don't have anymore. I think they had typhus. Like they had things that we don't really have anymore, but the idea was get the kids out of the city, somewhere safe up in the mountains where it's 10 degrees cooler, and they're not falling prey to these summer waves of disease. That's the origin of summer camp. There is no safer place that you can have 300, 400 kids and a staff of 100 young, healthy adults overseeing them and close the gates. No outside visitors. Do it for 4 weeks. Do it for 6 weeks. You cannot have kids standing on street corners for 10 weeks uninterrupted with no school assignments. Like literally nothing to do. It is a bad idea. I have 2 kids. They're relatively well behaved. They have a nice group of friends. I'm telling you, it's going to be Lord of the Flies shit if we don't put these kids somewhere constructive by July. All right, that's all I got. Listen, let us know what your thoughts are. I hope you're reading Michael's posts. I'm going to link to both of the ones I referenced. He's doing some of his best work right now in Corona times. Go ahead and give us a like. If you haven't subscribed to the channel yet, I don't really know what's going on with you. We just broke 40,000 subscribers, and we're only going in one direction, so you got to get involved. Subscribe, tell your friends. We will talk to you soon.